Alright, so you've clicked on a video that will teach you one of the most crucial lessons of banking and finance in the US: credit cards and credit lines. First, what is a credit card? Credit card is a short term loan that you take from the bank. Think of it as borrowing money from your friend. You take some money from him and you are supposed to pay them back in a certain amount of time. So, in this scenario, the only difference is if you don't pay the bank in time, they will charge you a fee, and that fee is called an interest. If you pay the bank the money that you owe them on time, you won't have to pay a fee. Unlike your friend, the bank usually doesn't waive off that fee. Now, what are credit lines? Credit line is the maximum allowance that the bank could lend you in a given amount of time. It's like the maximum money that your friend lends you, and that limit depends on a variety of different factors: your income, your liabilities, your credit score, and how long you have had that credit account. So, what do these credit lines and credit card contribute? They contribute to your credit score. In the US, credit score is like your report card. It tells people you borrow money from that you are a responsible buyer. In the US, if you want to buy a house, get a car, or any other expense that you can't pay in advance, you will need to have a decent credit score for the bank to lend you that money. So, if you have a decent credit score, you are a responsible user, you also get rewards and perks. Most cards have a cashback. For example, I use a Chase Freedom Rise. A Chase Freedom Rise has a 1.5% cashback. That means for every dollar you spend, you will get 1.5% of it back as a reward. It's a reward that the bank gives you for being a responsible user. Many cards have travel benefits and perks associated with them. For example, if you do a certain purchase with a certain credit card, you might get a discount. Or if you fly through a certain credit card, you might get free upgrades or lounge access. Three things that I think are very crucial to understand are interest rates, payment due date, statement closing date, and credit utilization. Now, first, what is credit utilization? Credit utilization is the amount that you consume in your credit limit. So, for example, your credit limit is $1,000. So, the amount of money you have already borrowed from that $1,000 is your credit utilization. It's always advisable to keep your credit utilization under 30%. But ideally, I recommend if you keep each card under 15%, it gives a very good breathing window for you. So ideally keep it under 30%, but if you can, keep it under 15%. It's a personal recommendation. Now, what's interest rate or APRs? APR is the amount that you will have to pay. It's like a fee that you pay the bank in case you do not pay your card in full each month. So now, a very important thing is payment due date and statement closing date. So these kind of sound similar, but they are not. A payment due date is the date at which you have to pay a minimum amount. If not, you will have to pay interest, and certain fees will come with it, and it will affect your credit score. And a statement closing date is the date when your 1 month statement is due. So it's ideally advisable, in order to get a better credit score, pay the amount before the statement closing date instead of the due date. What will it do? Banks usually report your credit utilization and how much you owe them or your liabilities to credit union on your statement closing date. So it's better to clear all accounts before your statement closing date. Now, something most newcomers like to ask: which credit card should they start with? So if you are just starting your journey into credit cards and limits, it's always advisable to choose a starting credit card that will help you build credit and help you in applying for other credit cards. So whichever bank you are a client of, I'm a client of Chase. So the best card for beginners for me was a Chase Freedom Rise. Now, a question that most newcomers or people who are just starting their credit journey ask is which card they should go for. I won't confuse you with a variety of different cards right now. So the best bet is whichever bank you are a client of, ask them which credit card do they recommend for beginners. So for me, I was associated with Chase. So Chase Freedom Rise was the best card for me to build credit. So credit cards in the US can be a very powerful tool. They can help you in getting rewards and benefits you can't get with a normal debit card. They help you in building credit, which will eventually help you in applying for a mortgage, for a house, or a loan for your car. These are very important tools, but tools are meant to be used responsibly. If you are someone that is not a responsible spender and tends to better liabilities, credit cards are not for you. Responsible use of credit cards is very important because credit card can quickly pull you in debt. So it is always recommended to be a responsible user because a tool is as good as the person that's using it. Thank you for sticking around till the end. If you like this video, please leave a like and hit the subscribe button. It's really helpful for new content creators, and you can watch my latest upload here. Thank you so much. Bye bye.